Welcome everybody to the Chinchilla Pickin' Podcast. It is April the 21st, 2024 at 4:10 p.m. My name is David Underwood and I'm joined by Brandon Beaver. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. Brandon, how are you, man?
I'm good. I'm good. Hey, look, I said last week we were going to trigger a correction. We're not quite to correction territory yet, but I knew the volatility was coming. It was an easy call.
I mean, the geopolitical events also helped you with that call there, but I
Well,
mean,
I
it
mean
was it was due.
the geopolitical events in my defense had already happened when I made the call last week that it was going to result in what it resulted in. So
Yes, yes. And I mean, I had a good time. I took some profit in the company I've held for forever, and I broke profitable on it, and I sold because I thought it wasn't going to do good in the earnings, and it didn't do good in the earnings, and it dropped. So I actually did the right thing. So now I
what
got some cash on hand.
what
I have
was
some
it?
cash on. It was in our group chat, Cooler Technology Group.
Yeah, okay,
Yeah,
gotcha.
it was like close to 90 at one point, and my break even cost was at 70, and I sold when it was in the 80s, and I got out before the earnings call because I knew it wasn't going to be what we wanted. I even posted about it ahead of time in Brandon and I's group chat. So our little group chat with four members. I posted in there and said, "Hey guys, I'm probably going to sell this before the earnings call," and I did. So yeah,
Oh,
I
you
got some
were
cash on hand. I'm ready to invest. Huh?
I would thought when you were saying 80s, I'm like, isn't this a penny stock? Like, but you meant
Yeah,
80
yeah,
cents, not $80. All right.
yeah. 80 cents, penny stock. Yeah, pulled out. So, anyways, very happy. I'm ready to invest that cash. So hopefully you give me some good ideas, Brandon. I'm looking on you to feed me here. I got some good ideas of my own, but I haven't decided on which one I want to pull the trigger. There's a lot of options for me. I mean, I'm down in Tesla. I could dollar cost average. I know you and I both are gonna mention something about that. So maybe I'll wait till after the show to see if that's one of my options. I do with my money, or if I invest in something else.
Well, I have another recommendation for the end of the show, but why not just go with Apple? I mean,
Oh well,
seriously. I mean, yeah,
I
June.
already I already own a little bit of Apple. Not much, but a little bit.
Okay.
I'm sitting on it. I mean, GE's announcing earnings this week. That's another one to look at too, ahead of earnings. So,
G.
GE Aerospace, GE
Yeah, okay.
Aerospace.
Aerospace, yeah. Okay. So yeah, and that's a good one. Obviously, I've held that for a while now, and well, I mean, since the spinoff, but I've held General Electric for a while now. Apple's only expected to grow like 1% this year in sales, but I think the China turnaround, when that does happen, and eventually it will, I think that's going to be a good catalyst. And Apple partnering with Google and Gemini, hopefully that boosts Google. Hopefully Google gets their stuff together, catches up with Microsoft and with Meta's Llama 3 technology, which essentially is Microsoft's technology also, and OpenAI AI. They're essentially the same, but
All right. Yes, and Google needs to fix Gemini because they got too many issues.
mm,
Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show. We also kind of go over what we're going to cover, and how the breakdown of things goes. That's typically what we do before we hit record. So I have a few stock twits as well. Funny things I heard on stock twits or interesting things I read on stock twits. And so that's going to be another ongoing part of our show. But Brandon, as always, take it away, man.
oh, all right. Netflix earnings. Netflix reported earnings last week, record earnings. But I was talking last week. I was talking about buying this company if we had a pullback, and I've kind of changed my mind. But let me get to the earnings first. $5.28 per share. They beat expectations by $4.52 per share, handily beating there. $9.37 billion in revenue. That was expected revenue was $9.28 billion. Total memberships 269.6 million, exceeding 264.21 million expectations. Net income for the quarter was 2.33 billion. 1.3 billion was the same period last year. So quite an increase there. But their forecast here was not so good. They're looking at slower increases in the next quarter. $9.5 billion in sales it guided for was just below the consensus forecast compiled by FactSet. It's $4.68 diluted earnings per share for the same quarter. Marks a notable decline for the completed quarter that we just had. So what we're looking at right now are the effects of password sharing crackdowns, and this was launched last year. And what this is doing is this is pulling forward a lot of growth. So the people that can't, piggyback off of their neighbors or their friends and their Netflix passwords anymore, they're signing up for new accounts. That's not going to last. So the kind of increase in subscribers that we saw year over year, that's not going to continue. It's not sustainable. That's my opinion. Netflix is currently trading, even after the decline of the stock as a result of the earnings, still at 42 times earnings. That was record revenue. It was record earnings, which are all good things. But if you're trading at 42 times record revenue, record earnings on a pull forward of growth and subscribers that is not sustainable, I don't want to buy the stock at this level. Go ahead, Dave.
It's sustainable if you have content. So you're in the business of selling a subscription to people, right? If you have the content that people want to watch, it's sustainable. Content such as Logan Paul versus Mike Tyson
Okay.
that you could only watch on
No,
Netflix.
it's not though, because not that many people do not have Netflix at this point. They've already got so many households in the United States and Canada and globally that have Netflix accounts. It's very difficult to grow from this point, I think.
Again, I disagree.
You can sustain the amount that you have and start adding to it, but the trajectory of growth that they showed year over year, I'm not saying it's not sustainable to grow. I'm saying it's
Okay.
not sustainable to grow at this rate that they have.
Okay. So you agree that they can grow, just not at the rate they're growing, because that's what I heard. Okay. So saying that, then maybe we do agree, because they can grow. There is growth for Netflix. I just signed up for an account last month. I never was paying for an account. A family member of mine had an account, and once they cracked down on that, I just never signed up for one because I already had other subscriptions and I didn't want to add to my monthly cost. But I recently signed up because I saved money in other subscriptions, and I said, let me just sign up for Netflix. And it kind of, I'm still saving money overall because I'm watching what I spend money on. But I think there's opportunity for Netflix, especially with the sports events that they're having. This is the second major sports event that Netflix is showcasing. If they continue in this area, they're going to pull in subscribers for that. I've seen HBO Max, which I also have a subscription to. Max has had a increase, like the NCAA tournament. They had all the games available on there. So there's a lot of sports that are now being streamed on these streaming services that before you had to have live TV to see. So there's more growth available in other areas as long as you could continue producing content. Netflix is a huge in the comedy, stand-up comedy area, of course. Everyone goes on Netflix for stand-up comedy shows. That's where you go to watch it, So there's a lot of available content for growth, but I mean, Netflix just has to continue producing shows.
I
But
agree
yes, the
with the
growth at
rest
this
of that.
level, I would, the
Yeah.
growth at this level, it would be hard to sustain, is what the term I would use. Hard to sustain.
Yes.
That's what I would
So,
say.
average analyst forecast right now put U.S. and Canada growth to come in at about 3.3 million subscribers, and that was far below the past 12 months of 5.2 million. So
Yeah.
it's difficult for me, and 42 times trailing earnings is actually, if you look at the past 5 to 10 years for Netflix, it's actually historically high. So you're still paying a historically high price on historically high earnings that might be a peak as far as growth goes. I need to see some discount before I can buy to that. I need that price to earnings ratio to come down.
So what price to earnings ratio would you be looking at?
30 to 35. So pretty substantial drop from where we're at even right now.
Gotcha. Gotcha.
JB Hunt also reported earnings. We've reported on the trucking sector, its declines. The trucking and logistics company JB Hunt posted a profit of $127.5 million. That was down from $197.8 million the same quarter a year ago. Quarterly earnings falling to $1.22 a share from $1.89 last year. Analysts were looking for $1.50 per share. Overall revenue sliding 9% to $2.94 billion. That missed analyst forecast of $3.11 billion. The carrier's top line revenue decline was driven by a 9% drop in the segment across revenue per load for both its intermodal and truckload segments, along with 22% fewer loads. So not only are customers paying less per load, but they have less freight right now, it seems, at least according to JB Hunt. They also reported a modest decline in average trucks and productivity for its dedicated contract services unit. Not good news for the overall economy.
Yeah, transports is a sector. So when you look at the railroads, you look at the trucking companies, they're a sector that really precedes the rest of the economy because if Walmart is not buying goods from suppliers and people who make the product, then they're not going to ship them. So if shipping goes down, then that means companies are buying less goods. So that means companies are expecting a downward trend in the economy. That's one way to look at it. But JB Hunt's business is separated in on a couple different areas. They have their dedicated loads for dedicated lanes, and then what they do is they do a lot of what do you call it? When you're contract, you used to do this, Brandon. You contract out to drivers.
Yeah, the freight brokering.
The brokerage. They have a lot. They have the brokerage part of the business. So JB Hunt's in two different businesses there. Basically, the dedicated you said was up or down this quarter.
Down.
So
Everything
dedicated is
was
down.
down.
So they're having to do more of the brokerage, which they don't make as much money off these brokered loads as probably they do the dedicated loads. I'm assuming.
I mean,
From my novice in the trucking industry. Would you
that's
say that's true?
I don't know. I came from a company that was not asset backed, so I don't really know the differences in prices there. I just know that freight industry's been suffering for a couple of years now, and people keep trying to call the bottom, and it's not bottoming. We reported before, I don't know how many shows ago it was, that the freight industry often precedes the rest of the economy into a recession. However, the freight industry goes into a lot more recessions than the overall economy. So it's a very volatile industry.
Cyclical.
Very cyclical, very volatile. Absolutely.
Yeah, and I mean, I would like to know how is Old Dominion doing. That's one of the big names that we kind of get freight on. UPS is picking up business from FedEx, so FedEx is losing business.
Yeah.
I mean, you look at some of these companies here, and you wonder. I mean, would you even buy FedEx now after they lost huge contracts to UPS?
No.
And is UPS even UPS has to charge more, don't they? Because they got to pay these union contracts. And they have wasn't a bad contract for UPS good for the union this last time?
Yeah, it was, but still, I view UPS as the bellwether for small parcel.
Gotcha.
And FedEx is pretty good at LTL, less than truckload, but I still, their business is they haven't really been able to keep it together as far as the balance sheet goes, not as well as UPS at least.
Yeah, I mean, I don't know. I mean, I used to be a long time ago as a union steward at UPS. I was a Teamster. And I just know that this last contract finally went in the union's favor, and that's usually not a good sign for the parent company because then now they're paying more out to their workers. But maybe if they're pulling it in, then it doesn't make a difference.
Does that mean that I'm affiliated? You're a Teamster?
was a Teamster.
Were you a made man?
It's funny. Everybody jokes about that during that time when I was there, and we used to get a list of people that we were not allowed to associate with if they ever came up to us. It was funny,
Yeah, well, you're not allowed to tell them the location of Jimmy Hoffa's body.
right? Yeah, yeah. So yeah. Anyways, JB Hunt, I wouldn't buy right now, like you. I mean, I've heard it, and I can't substantiate this, but I've heard rumors that they're not getting as many of their Waymo trucks being ran. That a lot of companies are putting that on hold for right now.
Gotcha. Gotcha. So that was one out of two companies and their earnings that I was looking at to kind of tell me, the overall picture of the macroeconomic environment. The second one here was Taiwan Semiconductor. They're expecting industry growth, excluding memory chips, at about 10% this year. They were expecting more than 10% about 3 months ago. So when they said 10%, that kind of, that disappointed a lot of investors. They trimmed the 2024 foundry industry growth outlook to mid to high teen percentage from about 20% projected earlier. They said macroeconomic and geopolitical uncertainty persist, potentially weighing on consumer sentiment and end market demand. The chip sector did face an industry-wide post-pandemic inventory glut in 2023. They're expecting robust demand for the high-performance computing segment for artificial intelligence, and then a mild recovery in the smartphone segment. But the rest of everything else, automotive, all of that stuff, remaining weak. Despite lower market guidance, Taiwan Semiconductor maintains its revenue growth guidance at low to mid 20% range. Artificial intelligence demand is very strong, obviously. What they're saying right now, automotives, the rest of chips, everything else, the inventory glut, all of that stuff weighing on earnings. Artificial intelligence is what's driving this company right now, and artificial intelligence almost alone, completely.
All right. So I here's the problem: is that the media and the news and a lot of people have very short memories and they want results now. So when everybody last year started talking about AI, we started talking about AI. AI started becoming the new hip word in the stock trading sector. AI this, AI that. Almost immediately, you have I saw ads on Instagram that I run for, hey, stock trading with AI. Like, you're a tiny company. How do you have stock trading with AI when Google can't even get Gemini working?
Yeah, right.
Give me a break. You're lying. Anyways, AI was a new hot thing. So when Google says it's going to be years before we really see real big profits from this, and 6 months pass, people are like, well, why aren't you making billions of dollars from AI yet? And they're like, hey, we told you it would be years before we start making big profits from this. It's just people are impatient. And so, they bought all the chips, they put the orders in, Nvidia's been pumping them out. Facebook's been buying them. Google's been buying them. Everybody's been buying them. They've been buying these chips up, and I think you got to reach a point to where you've satisfied. You're keeping up with demand. Demand is no longer outpacing your supply, and that's what I think is starting to happen with Taiwan. Is that they were able to produce so effectively that they're keeping up with demand. However, I also think there's been a drop in demand in the EV market, which is also affecting their demand as well. There's been a drop in certain markets that are affecting these chips. Not everybody's going out and buying a new cell phone every other year or every 2 years anymore. People are making it last because that's a big purchase and they can always afford to do so. There's a lot of different decisions like that people are making. And so I see, which is good, that Americans are finally starting to realize this and get their balance sheets in order, household balance sheets. But I believe Taiwan's keeping up with demand. Do you disagree?
No, I do think that they're keeping up with demand, but there's still a glut for things that aren't necessarily artificial intelligence related. And they were expecting a pick back up demand in the automotive industry this year so far. That up until this recent quarter, that's what they were expecting. Now they're expecting continued contraction in automotive and electric vehicles. So that was another thing that disappointed investors here. Also, keep in mind right now that the Chinese economy is in contraction, and there's some of the world's, a lot of the consumers of the world come from China, especially when it comes to EVs and technology. So if China's in contraction, that's not good news for Taiwan Semiconductor, and then it's not good news for Apple or Tesla either.
Yeah, it's. I mean, I've covered the news on the China GDP and their numbers here, and how they don't have enough jobs for everybody graduating on the last few podcasts. We've covered it all, man. We
Yeah.
had China is in a contraction, but there is some. China has been saying, "Hey, look, it's going to improve. It's going to improve. We're working on it. We're doing better." Of course, they're going to say that, right? But the contraction in the EV market had to be foreseen. I know I've mentioned on this show a while back. I'm like, how are you gonna expect someone who lives in an apartment building to buy any electric vehicle? Let's just use Tesla for example. Buy a Tesla. Where are they going to charge it? And that's
Right.
part of the problem in the United States is the charging infrastructure. It just doesn't exist like it should. Where all this money going from that was meant to build chargers? Yeah, Tesla's built a few chargers. They got some of the other chargers up and running, but they were doing it without the money. The money hasn't reached the final destination. Companies like ChargePoint and Blink haven't really got almost any money at all from these infrastructure bills that were passed to build this stuff.
Yeah, yeah,
Uh,
and we know from past studies that these big bills get passed, and a large portion of the money just goes and disappears.
right? I know. And
Goes.
so there is no charging station infrastructure currently in the United States that can sustain people in apartments, condominiums, townhomes, without garages, having charging their EV vehicles. They just can't do it. And then the people I do know here in Westchester, Ohio, man, when they I asked them about how's your charging going. You know what they say? They say, what, it's expensive to charge my car. So they always try to find the free chargers around town, like at grocery stores and so forth, and they charge them there
Yep.
because that's the cheapest way for them to charge their cars. And it's there's a lot of headwinds to EV vehicles, and then they were expensive to begin with. So the upfront cost alone is a lot for someone, and so people who are in the lower income or even middle incomes may not make that purchase.
Right.
But the news announced over this weekend, Tesla might help with that.
Yeah. Excuse me.
I don't even know if you wanted to get into Tesla or not, but
Yeah, well, I mean, we could talk about Tesla in a little bit, but I did say last year or last week, I said Netflix, Tesla, two of the companies I was looking at to buy, but I actually kind of came across another company a couple of days ago. And much like semiconductors, its products are in just about every industry that you can think of. But rewind your thinking about 100 years, because I'm not talking about semiconductors or computing chips or anything like that. I'm talking about ball bearings. Not exactly a new, exciting technology or anything like that, but let me go into this a little bit. Okay, so this is a company that came about 125 years ago, back in 1899. It's headquartered here in Ohio, in Canton, Ohio. It is a cyclical company, but it maintains a steady balance sheet at all times. I mean, it's pretty incredible balance sheet. Very stable company for being in a cyclical industry. I think this is a buy and sleep on it, in my opinion. And I'll go into why and let me talk about what it is. For 125 years, Timken has worked side by side with customers across diverse industries. This is Timken Company. And they engineer solutions for some of the most challenging problems, innovative products that keep our world in motion and enable a wide range of critical applications from aviation to space exploration to renewable energy, robotics. They partner with other leading companies such as Procter and Gamble, General Electric, and so on. They have generated consistent levels of free cash flow. This year, their free cash flow is at 440 million. So surprisingly, I always try to look for gross margins 40% or above, but they're stable at exactly 30%, just about almost all the time. And they've got great volume of sales, so that kind of makes up for it, right? So they have had 101 years of continuous dividends. Talk about stability. That's a good, piece of evidence right there for it. They posted $4.8 billion in sales in 2023. They have more than 19,000 people employed globally. They operate from 45 countries. They've been recognized recognized as one of America's most responsible companies. They've been recognized as one of America's most ethical companies multiple times over. One of the greatest workplaces for diversity by Newsweek. And Ethisphere, they're the ones that do the most ethical companies. I think they've been recognized as the most ethical company 10 times now. So, and one of America's most innovative companies by Fortune, and that was just recently. That was this year. So ethical management, consistency, good balance sheet. Net sales for 2023 were $4.77 billion. Adjusted EBITDA was $1.94 billion. EBITDA margin 19.7%. Adjusted net income 1.15 billion. Free cash flow 1.36 billion for the entire 12 months. Adjusted earnings per share $7.05. Return on invested capital, this is the one thing that peaks to me here. 113.8%. That's phenomenal. I think that this little known company, and one of my favorite things to do is buy these little known companies that just kind of sit there and stay out of the sight of CNBC and Bloomberg, and they're not so volatile. If you're looking for stability, looking for something that you can buy and then just continuously add to over the year, something that's stable, that's not going to go away, this company, I think, is a good candidate. Dave, you got thoughts on this?
I do. Yeah, their chart since 1975 has gone up. It's 10 over a little over 10 times. But it took 50 years. No, for let me say this correctly. It took 50 years to do it. And then their dividend is only 1.24% yield. So not in the last 10 years it's been flat. I'm not impressed.
Okay, so here's the
They
thing.
are solid. They are solid.
Yes.
But if I want to so I'm getting older, all right? I want to see some returns before I pass away.
You're
And
looking at it, I think, the wrong way, in my personal opinion.
okay, if I want to own it for 10 years, based off the last 10 years, it's flat. I didn't make it. I mean, just made dividend 1.4% or whatever it is a year. I could do better than that. Put it in a money market fund.
So not if you're buying dips, right? Like if you're buying at the tops and stuff like that, then yeah. But if you're buying at the dips, you're going to increase your returns. Second of all, I think the older you get, the more you should be thinking about capital preservation rather than risk.
I'm going to disagree with you on this, and here's why. With the older you get, you have to live off your money now, right? So you need your money to make money. Yeah, you're not going to be doing risky investments. You're not going to be buying penny stocks, day trading anymore, but you still need to make a minimum, and usually that minimum that you need to make is 10% a year off your money.
Yeah.
That's what most people budget for. Most financial advisors budget for is a 10% return, because after taxes and everything, you're living off of 5% of that. So 5% yearly income is what you're going to be living off of. So it doesn't give me that kind of return. A mutual fund does. I can put it in a nice, safe mutual fund.
So if you've got Tesla in your portfolio that has high volatility and that could deliver you positive 30%, negative 30% over the course of weeks, then maybe you want to buy something that's got a little bit more of a stability to it that can kind of, anchor your portfolio a little bit. Even this has been a little bit, I mean, if you look at the chart here, Timken has been quite volatile over the past 5 years. It really has been quite volatile over it. But I do think this is something that you could buy and sit on for stability purposes over the course of a long term. It's not going to go anywhere. It's not going to go to zero. Buy on the dips. Right now, we're not on a dip, so maybe just put it on your watch list.
There you go.
You know,
I'll do that. I could do that. I could put it on my
when we get
watch
back
list.
down to 68, $70 range on a recession or on a pullback at or a correction of some sort, then you start buying there. But I think it's something that at least to put it on your watch list and then buy once it's valuable.
There you go. That's what we
E-
can agree on.
Even dipping into it right now may not be such a bad idea.
It's not. I'm not going to buy it. I'm just going to be honest with you, Brandon. We've known each other too long for me to lie to you. I'm not going to buy it.
Okay.
You have not sold me on it. I believe it's a strong company. It's a stable company, and it's going to have it's going to have great return over 30, 40 years. But I don't want to hold something that long.
Well, I mean, and then if you think that there's going to be an increase in automation and and robotics, even electric vehicles over the course of time, this is going to be something that's going to benefit
Yeah.
because it'll be in those
So,
in the robotics. You need the ball bearings for that.
so will Tesla, who's going to be building the robots already.
Right, but that's one company. But I'm saying, like, if you're looking at technology for AI, what's everybody piled into? They piled into Nvidia because they make almost all of the AI chips. Right now, they're 90% of it. So if
Yeah.
you're looking for somebody that's going to be in all of the robotics, it's going to be Timken. So now, speaking of which, I'm not sure if Nvidia piling into Nvidia right now is even after this pullback is even a smart decision, just because I think that you got a lot of companies like Google and Apple and even HP and certain companies that are now saying that like they're so desperate for an alternative to Nvidia because they're paying those high prices that they're making the chips themselves. Somebody's going to pop up here soon and start applying some pressure to Nvidia.
Yeah, I mean they can't make the same quality of chips, not even close. So they have to buy from Nvidia for right now. But yes, every company's trying to divest from Nvidia, but they can't. They can't right now.
Not a good position for Nvidia. I mean, Jensen Huang, he's a very intelligent man. Great idea getting in. I mean, 5, 10 years ago, getting ahead of this AI thing and starting to reposition his company for the AI boom that was coming. But dude, your vendors have to be happy with you. Otherwise, you're going to suffer over the long term. That's going to come back to haunt you one day.
Yeah, I mean, and we've talked about this before. If you don't have competition, then you have very high prices, which is what you have with Nvidia and their chips. But what you see with Tesla and other EV automakers who are seeing EV across the board sales drop is that there's competition. Hybrids are doing better. Gas cars are doing better. There's competition. So let's bring this full circle to Tesla because I know you said you might mention it. I said I might mention it. We could just spend 1 minute on Tesla. Tesla's slashing prices. Why? Because of competition. Competition's breeding cheaper, more inexpensive products. Tesla's cutting jobs. I have one article that I was going to read, and it's from here. It is. Hold on. Where is it? 5 waves of UBS layoffs to start in June. So UBS, if you don't know, it's a huge Swiss bank. It's one of the biggest out there. They're planning to eliminate one out of every 12 jobs that is Swiss jobs in order to cut costs. Most of the cost savings to come from staff and analysts have estimated between 30 to 35,000 jobs could go globally. They estimate that in total, about 50% of Credit Suisse staff will probably be laid off over the 5 rounds. So that's actually a lot more. After the first round in June, which is about 25 to 30% of the former Credit Suisse staff, they're expected to be made redundant. And they did just do a purchase. So they did purchase another company, and maybe they have all that staff at the company they purchased or merged with if you want to, but Credit Suisse really purchased them. But it's going to save the first round alone is going to save them 10 billion a year.
Wow.
So with that much savings, imagine what you could do. So Tesla's cutting staff as well, 10% of its workforce is 13,000 people. If Credit Suisse is saving 10 billion a year, I wonder how much money Tesla's saving, and they're cutting the cost of the cars. I believe it's making them more leaner. They're behind. They're about 2 years behind on this, but it's making them leaner, and it's going to raise the bottom line.
I agree.
Because
Look,
as top line goes down,
yeah.
which is what's happening, Tesla's just behind the ball. They're late to the game on job cuts, but they're finally doing the job cuts that everybody else in the U.S. has done.
Job cuts that are needed to reposition for growth. Yeah.
Tesla needs to take some action, and that's what they're doing. Their stocks are going down, their sales are going down, so they needed to do something to fix a ship. And I see it as yet again another positive. I mean, at some point, the stock's got to be fair valued. You can't keep chopping away at Tesla and having the shorts win when there's a lot more to Tesla than cars. Cars is the main business right now, but like I said, there's so much that this company is doing in the future that I own it for 10, 15, 20 years from now.
Well, it's been a week for Tesla. It's been a week
It's
of
been a couple
bad
months.
news. I mean, yeah, but this week, I mean, Monday, the 10% job cuts, cutting 10% of the workforce was announced. Some people found out on Monday they were losing their jobs. Another group found out on Friday they were losing their jobs. Friday afternoon, that's when they announced the price cuts to I think two of the models of Teslas. So I think it was Model Y, and then I can't remember which other one the other model was. They're cutting $2,000 off of each price. And then it was on Thursday or Friday that it was announced that they were recalling the Cybertrucks, and it's every Cybertruck that's been delivered so far is being recalled because of the accelerator pedal issue. Turns out that it's not actually really, all that expensive to fix. It's going to be an easy fix once you take it to the dealer. It's the cover of the accelerator that's slipping and getting caught, which is very dangerous, but it's not going to be hard to fix. So cheap problem to fix for them, despite it being all of the Cybertrucks. I think people may have overreacted a bit to that.
See, here's what I don't understand is when 90% of all companies announce job cuts and they're cutting prices, but they're still profitable prices. They're not losing money on each sale. They're still profitable. When company announces that, the stock goes up in price. When Meta announced their job cuts, the stock went up in price. When Google announces job cuts, their stock went up in price. Tesla announces job cuts, and everybody says, "Look, let's sell now." I think there is a lot of spin by the media because of Elon Musk and his political opinions that he's been very vocal about, and it has a negative effect on how the media treats Tesla versus every other company out there. And I don't want to get in any political arena or nothing, but I do believe there is a little bit of discrimination there against him in regards to that. When most majority of all job cuts that are announced, the stock will usually go up because it's a cost saving.
I do. I agree with that. I 100% agree with that. And usually the job cuts kind of signal a bottom in the stock, but I think that sentiment, I said cinnamon, sentiment has been so negative here. The people kind of viewed it as another example of Tesla's downfall, but I don't think we've seen Tesla's downfall. Recalls happen all the time. You got everybody's pumping up Toyota right now, saying that Toyota is going to be the next best, number one valuable automotive company in the world. And by the way, they are getting into electric vehicles. They've done it, they've spun around. Toyota's approach to this whole energy thing was hybrid. Now they are actually getting into the EV arena. But they just had a recall of tens of thousands of vehicles over the week as well. Was not reported on that
Yeah.
I saw.
Yeah.
Not by major media, at least.
Yeah.
So
It,
all
it
they have
is.
to do is just make sure that this cover on the accelerator sticks, and they're going to be good to go. It's probably going to be a half-hour fix, and that's it.
Yep. All right, so I want to switch into stock twits if we can. I got a few stock twits here. This works perfectly into one of the one of my first stock twit here. This one was from Unda Stan. That's his name. I don't know. I mean, or her name. People make up weird names here. And they tweeted, despite everything, Elon Musk turned this all into a giant joke and somehow made this all a perfect ending. Much respect. So what they're talking about is on X. Someone posted that Nvidia was down $213 billion today. This was on Friday. Um, and they were losing value, right? It was dropping. They lost $215 billion in value. Well, Elon Musk replied to that X response, and his reply was rookie numbers. So I really like that one. That was a good reply. Having some fun at the fact he lost so many hundreds of billions of dollars of
Yeah.
value, and he's able to crack a joke about it. Lets me know all I need to know. Um, one I don't know if it's funny or not, but this guy was about Nvidia. Parlor made tweeted, "You don't always get what you pay for. With Nvidia, you get more." Not recently, but yeah, usually that's the case. And then this was fun because this was a slam on the upcoming Meta earnings call that's coming up, and this was on the Nvidia stock twits, and this person Jay Elway, I don't really believe it's John Elway, but hey, there you go. They wrote, "How many times will Zuckerberg say AI and Nvidia on the call?" Because I'm willing to bet Zuckerberg's going to say it a few times.
Yeah.
Uh, but there you go. There's some lighthearted stock twits I found. Let's get into something. Some people might say that I am a what do you call it, a perma bull. I'm not. I've gone negative before on the economy and markets. I've been bearish at times. I'm bullish most of the time, but I'm bearish when I see numbers. Right? If you show me the actual data and not just speculation and not just that this one bond chart inverted, and so that usually means that we're going to go into recession in the next 3 to 6 months. Or when I ask somebody for a timeline and they can never give one, I'm like, then it just discredits everything you say, in my opinion. If you can't give me a timeline from when this happens to when I should see a recession, it's all
I
hypothetical here.
disagree with you on that, but
I know you do
that's
because
fine.
you and we've had this discussion on the show, and I know you disagree with me on that, and that's
Yeah.
fine. But let me get into these two articles. They're short articles. They're real quick. The first one is it came out on Reuters yesterday, 4:20 at 2:04 p.m. The headline is "Growth is too low, but focus must be on price stability." And this is a Swiss National Bank chairman, Thomas Jordan. He said this in remarks on Saturday that monetary policy should remain focused on price stability. So, I'm going to read this one because it's very, very quick. Speaking to a national broadcaster, SRF, he said economic growth and productivity are too low, and many countries are running too much debt and excessive deficits. One of the most pressing challenges is insufficient growth. Jordan told SRF. Another is the need for structural reforms to increase countries' productivity and boost growth. In many countries, the debt level is too high and deficits are too big. This is what he said while he was there attending the IMF, International Monetary Fund, and World Bank meetings. He went on to say that cannot be sustainable and will have to be corrected in the future. It is very important that at the same time, monetary policy remains geared towards price stability rather than monetary policy being needed to finance debt. Otherwise, it will not end well. This is what a huge bank in the world, the chairman of the bank, said, and it was very interesting to hear him say that. Before I get your thoughts, Brandon, I want to read us a few snippets from another article. This one again came out yesterday, 12:56 p.m. And this is again from the IMF meeting with the World Bank, and this is IMF Skopinov says high U.S. deficits is fueling growth and higher interest rates. So you may think, okay, this is a positive one. Well, no, yes, and no. Gopinov told a physical forum at the IMF and World Bank spring meetings that the U.S. deficits are projected to rise for years with one of the world's steepest curves for debts. The high level deficits are also supporting growth and demand in the United States that have a positive spillover to the rest of the world. But he says, along with that growth, you're getting higher interest rates, a stronger dollar, and the second two are creating more complications in the world. They went on to quote some U.S. deficit for 2024 is going to reach 6.67% of GDP, rising to 7.06 in 2025, double to 3.5% in 2015. Um, he says a review of U.S. economic policies in the coming weeks will again recommend that the U.S. raise tax revenues and reform its costly Social Security and Medicare programs for older Americans to bring down deficits. Again, this is not any U.S. politician saying that. These are bankers from outside the U.S. at a meeting of the IMF and World
But
Bank.
the second guy, did he just say that we're getting a stronger dollar?
He says, yeah, with that growth, because all right, so he's saying that the U.S. is put in is how do I put this in a very layman's term, basic terminology here, is that the U.S. is printing money, pushing it into the system, and giving it into pushing it into the economy, which is making the economy raise up. But because they're doing that, they're getting higher interest rates because of inflation. And due to both of those two things combined, you're getting a stronger dollar, is what he's saying.
Okay, that's not true though. The stronger dollar is not the case when you have 3 to 4% inflation year over year, even to this day. You're getting a less weaker dollar, if that makes sense, because it's not weakening at the pace that it was weakening at before. But when it takes more money to buy goods and services than it did a year ago, the dollar's not strengthening. It's just losing strength less fast than it was before. Does that make sense?
Yes. Yes. Yes.
The higher
Um,
interest rates should mean a stronger dollar, but it doesn't because our government keeps spending way too freaking much.
which is what this gentleman is saying, right?
Yeah,
This is a
yeah.
banker from outside, not in U.S. That's not in U.S. politics. This is an outside person. When he was asked about what's some of the dangers and risks to the world, right? And he brings up the U.S. economy, and the reason why he's bringing this up is he says that because the U.S. is pumping money into the system, it's raising the economy, and thus people can import into the U.S. and suppliers around the world get a positive boost from it. So there's a positive boost from the U.S. pumping money into its own system. However, there's
Other
negative
countries.
effect. Yeah, he's saying, however, there's negative effects because of that.
Mhm.
Um, but he goes on to, when they ask about prospects of a widespread debt crisis in developing countries, Gopinoff said, "We don't see a systemic debt crisis happening anytime soon, but they are worried about the United States." I bring that up, and I want to give you one example here of some of the credit and the household income security situation in the United States is a popular buy now, pay later provider is offering a new card. It's called the Welcome Alternative to High Cost Credit Cards, but it has hidden fees. And it's Klarna. If you ever heard of Klarna, they're like a firm, they're a buy now, pay later company. So they're now coming out with a credit card. Here's the problem with their credit card because they're going after subprime people, of course, because that's who uses the buy now, pay later for the most part, is subprime individuals. And I found this article on Market Watch, by the way, if you want to look it up. It doesn't list when there it goes. It came out yesterday at 6 a.m. So Saturday is 4:26 a.m. But it says that the interest rates go up as high as 33.99% on your credit using this credit card. And that's just outrageous. But people are already applying and getting it because there's a need for credit in American households, and to me, that's dangerous.
Yeah,
That's
yeah, it is.
dangerous that we're playing
Listen,
with that.
it's predatory, but then again, you make your own bad decisions.
Yeah, and Klarna's getting away with it because they're saying most of the time it would be as low as 14%. Most with what they're saying most of the time, but I doubt it. Most people who are subprime and need a credit card like this are going to get the credit card and they're going to max it out, and so it's going to be at that 33.99%. And then they're just going to hit with that, and then it's just it's not a good situation, and I don't like it. But when I put all these things together, that U.S. household debt continues to rise, that these credit cards are coming out from everyone. I'm surprised, my local gas station doesn't have a credit card. If they do, I'm just not aware of it. But like, it blows my mind, Brandon, that we think that credit is income, and it's not income. You're
And,
borrowing.
and nobody needs the credit card.
I,
You think
right.
you need the credit card. It's a frame of mind that you need the credit card, but you do not need the credit card.
So here's my thing with this being an election year. If we move to continue with quantitative tightening and move away from quantitative easing, and we go down to zero quantitative easing, which is the goal currently by the current Federal Reserve, is to get it all the way down to zero on quantitative tightening, but they've admitted it's going to take years. But they're doing it, right? They're quantitative tightening, they're pumping less money into the economy. They continue doing that. We don't pass any more bills that prints money to put into economy. According to these bankers from around the world, they're saying that's what's holding up the U.S. economy.
Yeah, and the other thing too, going back to what the first guy said, unfortunately, with the way we run our banking system and the fiat currency, you cannot virtually it's virtually impossible to have economic growth without financing of debt. So that's the conundrum.
Yeah. And so what all these people are saying basically is if the U.S. stops this printing of money, which I believe we need to, it's actually going to put us in a recession very quickly, and it could have systemic tides around the world.
Yeah, and by the way, price stability is supposed to be the function of the Federal Reserve.
Yes.
That's
But they've been buying. I mean, it's out there every month for anyone to look at how many billions. Before they started quantitative tightening, Brandon and I were talking about this. They were buying was 100 million a month of bonds, and 20, or is it billion? 100 billion or 100 million?
I think it's billion.
Is it billion? And 20 billion of mortgages a month, and that's just outrageous that they're buying this. And so it's the amount of debt that the government holds, and they need to get rid of it and let it go out into the private hands. And if we go into recession, it's probably needed.
Right.
And so, but this is why when people ask me, why aren't you, David? Because I get asked this question by more than one people. So, Brandon, I have my mutual acquaintance, but his old time friend, he asked me, how come you don't, you disagree with Brandon that, I agree with him that we are going to go into a recession. And I said, well, the numbers just aren't there, man. You have these charts and things to say it is, but I'm not seeing the data, and it's because the government, these bankers are saying it. It's because the government's propping it up with money, and
Not
there's always new
sustainable.
credit.
It's not
It's
sustainable. That's never
it,
been sustainable. That's what we did before 2007.
yeah, it's not sustainable, and there's always new forms of credit, such as Klarna credit card for households. So I mean, right now that we're in a non-sustainable environment, but my point to you guys is we're in that environment right now, though. So until something falls, there's no point in me being a bear.
You might be right about that. And maybe, I kind of think that we've skipped over for about a year the fact that we did have a technical recession about a year and a half ago. And maybe that was it. Maybe we've recovered and we're moving on. But I got to tell you, I mean, with just talking about the freight industry and everything we've talked about over the past year, it's still, I've been data oriented too. I haven't really been looking at charts. I don't care for those things. It's like
It's a tool, is
astronomy to
what I
me.
say. It's a tool.
There's certain aspects of it that work when they're charting the psychology of investors and things like that. But a lot of it's just astronomy to me. It's like reading the stars. You might as well read your horoscope every day. It's similar. Palm reading, essentially. Snake oil salesman everywhere when it comes to the charts. But there's a lot of data that says, like, hey, every time this has happened, every time X has happened, we've gone into a recession. And it's hard for me to ever say the words it's different this time because every time the masses think that way, it winds up not being different.
Yeah, I know, but it's like I said, these bankers have called it out. They said that it's being pumped up by the government, and until the government stops it, it's we're going to continue to be pumped up.
I don't see a debt crisis either, just because we kind of rely on our military might.
Well,
If
no,
they, you know,
these bankers were asked about a debt crisis in other areas outside the U.S. because they kept pointing to the U.S. They've said the U.S. is in a debt crisis, but we're not feeling it because we're pumping up the system with the debt. But we need to do. They said that like they were asked, "What do you think the U.S. needs to do?" And they said that the U.S. needs to get their budgets in line and raise taxes or cut spending, but they need to do that. That's what they're basically
I think
saying.
it's, I mean, I think it's very possible that China has one, and we may not know it. They may be going through it right now and just, patching up the numbers, and we'll find out in 3 to 6 months or a year. Who knows?
There you go. All right. Well, it's that time of the show. I'm gonna stop right there and a hard stop right in the middle of it. I know I
All
love
right.
doing that, but like Brandon, final thoughts.
All right, let me get to it. Bad week for Tesla. I'm still thinking this is a buy. I still think it's a buy. I mean, Tesla's total revenue, they did increased to $96.8 billion for the 2023 fiscal year. They generated about $45.2 billion in revenue. That accounts, and the United States alone, by the way, $45.2 billion in revenue for Tesla. That accounts for 46.7% of their overall total. What they get from China is 21.75 billion. It's 22% of their sales. So China's decline, obviously, is hurting Tesla. It's going to continue to hurt Tesla. It's not going to be permanent. So,
Now,
I mean, I just think you start buying into it, and you can dip in now and buy, over the course of the next year or two.
now imagine if Tesla gets $10 billion a year in savings from these job cuts.
That, and then also, I'm sure they're going to be in line for government subsidies again.
There you go.
Elon's the king. I don't like it, but Elon is the king of government subsidies. He's proven that in the
I
past
mean, if the government's offering this grant money, Elon's like, I'll take it.
all the time. Yeah.
He's very critical. He says we need to cut back on this, but if you're going to continue to offer it, I'm going to take it.
Yeah.
So, is what it is, right?
Hmm.
All right. My final thought is we have a lot of big earnings this week. Huge companies coming out of earnings. Meta, I'm sure Brandon will cover that next week. Maybe, maybe not. We got Tesla earnings coming out. GE Aerospace earnings coming out. Boeing earnings coming out. Be interesting to see what all these effects on Boeing has had with them. That's what's coming out. There's a lot. I mean, I could just go down a list of this week of just earnings, earnings, earnings. I'm pretty much positive that next week's show is going to be about us covering different earnings. Norfolk Southern, Old Dominion for transports. If you're talking about transports, they have earnings coming out this week. We'll get a good idea of how they're doing. Looking in that area, but not much else that I'm going through this list here as I'm talking, and I don't see any other ones that I really want to call out right now. Yeah, I'm just gonna leave it with that list there and just kind of see what's going on. Yeah, nothing else. No,
Temkin
no, no.
Temkin will report on the 30th. FYI.
Timken will report on the 30th. There we go.
Numbers.
Union Pacific, there you go. That's another transport they're reporting this week. So you got a lot of ones going on. So I'm looking forward to the earnings this week. That's gonna be what I'm watching. I still have that money I made from my profit on Cooler. I'll be looking for an investment for that. If I find a quick day trade, I'll post it to the Instagram like always. So follow us on there or TikTok. Um, we try to do some posts. I'm sure Brandon will do a TikTok post here soon. Right,
Yeah,
Brandon?
I'll do a TikTok post. Meta earnings. You know what? I wouldn't be surprised if they beat, but the stock comes down because it's been on a tear for the past year, even after last week's declines. Um, but then again, who knows? Guidance may come in pretty well from Meta. 2024 is supposed to be a spectacular year for advertising, so we'll see how that plays out. I'm sure a lot of that's going to be political.
Maybe we'll post an over under on how many times Zuckerberg says AI in his conference
Yeah,
call.
yeah, yeah. I hate that.
All right, that's all we got, guys. Thank you everybody for listening. As always, I hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.